Hey everybody, welcome to the morning market briefing. It's Thursday, February 19th, 2026. Hope you're doing well out there. Ben, Tom, how we feeling?
Feeling good, feeling strong. Nobody told me we were going to wear our starter
It was
jackets
pretty
today.
impromptu. Yeah, I was a little chilly this morning. It feels great out, but
It's sweaty out.
it's muggy outside, but then inside because of the humidity, I feel like we've got a little AC going, which you don't necessarily need when it's 61 degrees outside. So it was a little chilly in the office, but you know, I'm a survivor. I'm going to weather through this storm. We do have some interesting content coming out on the podcast feed, so make sure you're subscribed to that in a couple of days. You guys have a special interview going
Yeah,
down
we've got
today,
a very
right?
special podcast. I think it's going to go out probably tomorrow afternoon.
Something
According to
like that.
He's got to edit it up, but we'll do that this afternoon.
So
So stay tuned for
make
that.
sure you're subscribed and make sure you like the YouTube channel, like the videos, share it with friends, all that good stuff. We got the Fed meeting notes yesterday. Tom, as you see it, what's kind of the lay of the land as we look at this transition and start to anticipate the arrival of Warsh and his chairmanship?
I think the big takeaway is that the Fed was more hawkish, I think, than we thought going into the last meeting. There are a number of pieces in there where there were members of the Fed who are advocating first and foremost for a two-sided statement, basically saying we could go either way at this point because inflation could tick back up. There were notes in there that there were Fed members who were in favor of potentially hiking rates, which I think is a real surprise.
I mean, can you imagine the market reaction if they had done that?
Oh my, no, I don't know what
Who
would
do you
happen.
think that is?
I don't know. Whoever, I think it's the people who are doing the least amount of research. So who are the mail-it-ins on that?
Cook.
Yeah, Lisa Cook. I mean, was it Hassett? Hassett came out and said that the New York Fed's research they put out on tariffs to kick off the worries about inflation was so bad that those that put together the research should be disciplined. So like that's just how bad the Fed was on the tariff situation. That they, looking back, they look at that New York Fed report on what tariffs were going to do to the economy, and it was so bad that I guess they're going to spank these people.
Wait, who called for discipline?
Kevin Hassett. So he basically was like, "Hey guys, we really
Daddy's
were, yeah."
home.
So I think the same people who are advocating for hikes are the same people who probably still believe that the boogeyman of 6% inflation is coming around the corner. But again, I can't stress enough.
Cook seems like a possible candidate. I mean, you think of her life situation, and she's probably got 5 or 6 primary residences with very low mortgage rates, and she didn't really care what the rates are.
Yeah, but her legal fees are exploding.
They're going
That's a
through the
real
roof.
concern. But I can't. I mean, this is a part of human nature that people don't think about. Is that if you go 10 years without getting in a car accident, and then you do, for the next year and a half when you drive, you're stopping short. You're worried about intersections. And that's what's happened with inflation, is that we didn't have inflation for a really long time. We'd never been in a car accident. And then we got in a really bad one. And now the only thing we can think about as we leave our home every day is, man, we could get in a really bad car accident. And I think
Putin's fender bender.
Yeah, Putin's fender bender.
I mean, it wasn't until COVID came that people were no longer worried about another housing bubble.
Yep.
Yeah, exactly. Yeah, and that's the thing. Is like
And then everyone bought houses.
Yeah, no one was concerned that maybe they were buying at the top when mortgage rates were 8% and the average house was $1 million.
And there is an element, I think, for the general public, not decision makers at the Fed. I think people associate to their most recent financial trauma, which is why from 2008 on it was, in some cases, I think still is concerned about the exact crash of 08 and 09 and that being replicated. I don't love the Fed's inability to be intellectually honest and not that fragile and impacted by that trauma.
Yeah. I mean, they're just, because I would argue Jay Powell especially is worried that inflation comes back up because he was so wrong about it the first time. He said it was transitory, that it would be done by the end of the year, that we go from 9 to 2 in 6 months, and that didn't happen. And then, he very bravely raised interest rates 6 months too late and took a lot of adulation and congratulations for that. But he was wrong. He was very late, and then he had to really recover. People forget they only raised 25 basis points the first time, And then they got into a cycle where they were doing double cuts or double hikes and triple hikes to get it.
And
So
by the way, inflation was much higher when they still had zero rates and were doing QE than what it is today.
Now.
Yeah, and so
on a different trajectory.
And then that goes into the argument we've been talking about the long bond a lot, is that if the 30-year Treasury didn't get to 6% when inflation was 9%, why would it get to 6 or 7% if inflation got to 5% again? Doesn't make we were there and it didn't happen. So and we're not going to get to that level again without some real changes in the economy. But we're why would it be worse? But that's the thing, is everybody's so scared and so tight about inflation that it almost it's like when a recession, the more you're worried about a recession, the less likely it is to happen. The less you're worried about inflation, a recession, the more likely it is to happen.
And that's what the knock-on effect that I'm really concerned about with the Federal Reserve moving forward is the other component of the dual mandate, which is the employment picture. And if you tag that on to the data that we got last week that is just seems incorrect, it's very evident. We've raised the question, when will the Fed start paying more attention to the employment market than to inflation and price stability? It's very clear that they're very entrenched, per the meeting notes yesterday, on the pricing stability side.
Yeah, and
they're not thinking, I don't think, about the employment picture.
I don't think they're worried about it at all,
I mean,
especially now because
the data's coming through.
I bet they're like, man, this data's great. I bet they forgot that a year ago they beefed it, and now they're like, okay.
Well, and also it's like that data, which showed a stronger employment number in the month of January, also showed 1 million jobs from last year that were wiped off.
Yeah, they've created, the Fed, whose job is, to make sure that we have maximal employment, has not done a good job at that.
I think the biggest thing that stands out to me, and I watched the Fed's open meeting on banking regulation last summer, and I thought it was incredibly informative because
in a depressing way.
Yes. Optimistic in terms of there is a lot of intellectual firepower at the Fed. It's just not concentrated in the people who are making the decisions.
Yeah. I would argue that it's academic accomplishment firepower, not necessarily intellectual firepower.
So I would push back a little bit on that, in terms of some of the presenters who presented hey, this is what we need to do on the banking regulation. Presented really effective arguments, very well reasoned, kind of nervous because they're presenting to a big audience, but I thought they were actually really talented. And there were a couple on the Fed who listened and asked good questions. And in fairness, Jay Powell was one of them. But there were a few who either were not on the call, were absent. There was one who was on Zoom who I think would be asked to talk and was like, I have nothing. And then there were some others that said, I'm against this for XYZ reasons, which the presenter had already addressed. And so I think there's an agenda in some of the decision makers that is really faulty. And where it's concerning is that you have this huge, we talk about the Bank of England all the time about how there is good, healthy dissent, but it's open dissent. Here we have the Fed minutes, and we got several saying that we need to hike rates. We have several saying we need to cut rates. But beyond that, we also have some, which is more than several, saying that we need to keep rates where they are. So basically, you got, call it 2/3 to 3/4 saying, hey, we either need to keep rates where they are or hike rates, which is a little bit concerning because I just think it's a limited, to your point, Tom, view of the situation based on speculation. We've shifted from reasoned analysis to speculation. And I think it's a really difficult challenge for any chairman to kind of coalesce those. And we've seen that with Jay Powell. He's kind of got the inmates running the asylum right now. And so Kevin Warsh is going to come in all likelihood, and really have to cobble this this group together, which is going to be tough. By the way, one other thing that
Hassett's
happened.
going to get his paddle
Yeah,
out.
he's gonna be the sergeant at arms with his ruler.
One thing that they also made an announcement of, which did not come out until we saw the meeting minutes yesterday, is that Jay Powell has been elected for the entirety of 2026 as chairman. So if the Senate holds up any confirmation process, Jay Powell is chairman until...
Dude, Timorous was going bonkers on Twitter about
Yeah,
this. He was just absolutely loving it.
Yeah.
It's like, I've got...
My sweet prince remains in power.
Yeah, Daddy's home and he's staying home.
Yeah. Discipline on pause.
Yeah.
I mean, it's really wild. I just think the disconnect between the real world and, frankly, the data and the way these people are thinking.
I mean, I would say that Ben spends more time thinking about what the Fed should do and looking at the data
Than
a majority of the active participants of the Fed. You know.
Well, in fairness, I don't have multiple houses to worry about.
Yeah, that's true.
Yeah.
Yeah. People forget that during that banking committee, Lisa Cook was browsing Zillow and not paying attention. She's seeing what beach houses are going for these days.
She's like, that looks like it could be my primary residence. Ben, let's talk companies. Seeing some real divergence in performance from those reporting in the last 24 hours. What stands out to you from a thematic perspective?
Yeah, we can just kind of popcorn around here. I'm curious to hear your thoughts. John Deere, I mean, agricultural sentiment is through the absolute floor. People in farming are very depressed because they've produced all this product, which means the prices are low. I mean, we see Walmart having disinflation on the groceries in the grocery aisle, and farmers are doing all this work and not getting really paid for it, and so they're not happy, and so they're not buying tractors, and that continues to be the case. But it's not worse than it was 3 months ago, at least as Deere's concerned. It is for some other companies. But what is better is that Deere also has a construction business, and that is doing better than expected. And interestingly, I mean, you'd think, well, I mean, same as Caterpillar, you know, they're doing well in construction and data center, but it's also road building. Road building, they just revised their guidance up for the year from 0 to up 5%. So I thought that was significant. And Deere is a company where all the hedge funds and pod shops out there want to short this company because it's in a down cycle, and they're seeing this alternative data like ag surveys that say Deere is in a really, really bad spot. And so I think that you could see a squeeze higher, and we're seeing a little bit of that this morning.
Yeah, up about 6%.
And I contrast that with Walmart, which has performed exceptionally well. New CEO there, and all this shift from higher income people to Walmart, it's beginning to fade a little bit. Last 2 quarters have been just up low single digits in terms of general merchandise spending. They are beginning to see some cost inflation on that side of the business, and they're passing that through. It's resulting in higher margins. But this quarter, if you just exclude everything else that Walmart's done, you look at Walmart this quarter, and basically it's a drive-up grocer, which isn't a great business.
No.
If you, in context, you know, I think that a lot of people are still buying the narrative that more people are shifting to Walmart. They have this growing advertising business, and they are going to continue to recapture a lot of those higher income consumers. But if you just looked at this last quarter, it's not good, and the guidance was fairly soft as well.
Got to tell you guys, Walmart Plus is legit. Big fan.
I've never used it, I don't think.
You can get it free with your Amex. Yeah. And,
done.
You can order some stuff, and it shows up at your house in an hour.
We're also, Andrew, reaching the age again of the blame game at a lot of companies. Yes. And usually these companies are, you know, companies that don't execute very well and have a lot of debt. And one of them is Carvana. That was down 9%. One of them is Ava's Budget, down 14%. And he's like, oh, well, people aren't just they're not traveling, they're not renting cars, they're not buying cars, it's just frozen market. Well, then you look at Booking Holdings, and that was flat. I mean, pretty solid quarter. And so this is very much an execution story. Carvana spending a lot more money on reconditioning costs, almost like people are just dumping their used vehicles for Carvana and then having them detail it and touch it up and replace things that are broken. It's almost like that's happening, and Carvana says no, this is just kind of a one-time phenomenon.
Yeah. We'll only need new tires once in my life.
Transitory.
And then Avis Budget, Tom, they might be doing a Hertz. They just took a $600 million charge, $518 million charge related to electric vehicles. That was a total bust. And they have $19 billion of debt, $4 billion in market cap, and they've blown through $1 billion in free cash flow in the last 2 years. This is a company that is not in a good spot. And again, it's crazy to me because they've consolidated the rental car space so much, and yet no one has pricing power. In fact, Avis competes with Budget.
Yeah.
Like why don't just consolidate that under one brand, or at least price it effectively? Like they're basically undercutting themselves at each turn.
It's just it's remarkable to me that you can't make money on that business. Like, it just seems like, I mean, you buy an asset, you rent it out. I mean, it's almost like Blockbuster, but like you can't Netflix a car. You can't stream the use of a rental car. So it's impregnable at this point, So like, why can't you, buy a car, rent it out, and make money on it? Like, it just doesn't make any sense. Like, if you can rent it out 3 times a week, you can make the car payment plus interest, and you should be cash flowing, and then you can sell it off, and it's an asset. But like, they can't seem to do it.
I firmly contend that the highest paid, most valuable CFOs in the world should be at contracting companies, and they should be at car rental companies, because these are companies where you have to make massive assumptions on depreciation.
Inventory management is crucial.
Completely. You got to make assumptions on revenue and costs and all of these things, and you got to be dynamic and open and honest with yourself about how you're managing this. This is where I would pay the CFO more than the CEO if I was the owner of those companies, and I don't think that's the case.
I mean, the top deals on Avis car sales right now, 2024 Volkswagen Tiguan, $18,000. I don't know if that's a great deal or not. It seems like it might be okay.
Seems pretty good.
It's got 29,903 miles on it.
The blame game topic, Cheesecake Factory might be the one that's my favorite. Everything would have been great for them except for their sales were down, and that was just because of the weather, the government shutdown, and the holiday calendar. So just tough times for the Cheesecake Factory.
I mean, I've eaten at the Cheesecake Factory once in the last 6 months, and I've eaten at Darden stores, Longhorn Steakhouse, Olive Garden, probably 10 to 20 times. I mean, they who are just leaning into convenience, value. Yep. I mean, you can go to Longhorn Steakhouse and have a really good steak meal. I've done it with my wife and I for like $40.
Yep.
You can't do that anywhere.
They're good on the to-go orders. It's a frequent stop for the Hall family after church on Sunday. Put in the to-go order, pick it up. It's ready.
And they give you a free loaf of bread, which no one does anymore.
Yeah.
No such thing as free loaf of bread.
No such thing.
Rule number one in economics.
That's what got Aladdin in all that trouble.
Mm-hmm. Yeah.
Trump speaking this afternoon here in the home state of Georgia, an economics speech. I'm sure it will be wide-ranging in its content, but focusing on the golden age of economic growth. What do we think? We'll hear anything new?
Ooh, that reminds me. We got trade deficit numbers. I need to look at that.
They were bigger. So that's going to be a hit to GDP for Q4. I think it's going to be a State of the Union preview, which I think is next Tuesday. And so I also think that it comes ahead of the Supreme Court. The last time that they could have announced on the tariffs was middle of January. So the February 20th, tomorrow, is the next day that they could make a ruling or an opinion on the tariff. So I think he's probably going to be leaning into that. So we'll see. I mean,
on that topic, Mark Halperin on the Two-Way Show that we've referenced before with political commentary, he makes this point. I think he's spot on, but we have got to find a way for the Supreme Court to address meaningful topics, specifically ones that impact a lot of people, a lot of companies, and other countries. they've got to make these rulings faster. I mean, it's insane the structure and the pace with which this is moving or barely moving.
Yeah, I completely agree. I mean, that this is a time sensitive matter.
Yeah.
I agree. I mean, if I was honestly, what I would do with this is I would pull an Andrew Jackson and say, or was it Andrew Jackson who said the Supreme Court's made its ruling, now let him enforce it?
I thought you were going to say get some reservations going, because I think he did a lot of that.
But
the original
Speaking of going to restaurants, made a lot of reservations, that guy.
He did.
I mean, he was open table's dream.
Ben said, no, thank you. I don't want to comment on that.
Just going to leave that.
And we did talk about a county in Washington the other day. But no, I mean, I think that the refund situation is becoming more and more meaningful, and I think it becomes more and more difficult to undo the tariffs. I mean, Kalshi, I think, it still has a 20% chance that the tariffs are actually upheld. The longer that this persists, the more I think that the Supreme Court either is trying to figure out a way to uphold them so that they don't have to worry about all the refunds, or kind of legal smith their way into an argument where the administration does not have to refund the tariffs. And I think that might be holding it up.
It's kind of like the Booth Review in the NFL. If they're looking for something clear and obvious for which to overrule this, that should happen quick. If it keeps dragging out and then they overrule it, it's going to seem optically very manufactured. And I candidly do. I think any listener of this call knows I don't know the law well enough to know whether it should or should not be overturned. But the longer it goes, if it comes with an announcement of overturning and refunding, the more manufactured it will seem.
Mm-hmm.
All right.
Yep.
Wrap it up
I
there.
don't have a lot to add to that. Burrito Day. Like, subscribe, tell a friend. Look out for the special pod coming this weekend.
Yep.
And,
Let's rock and roll. Talk to you guys soon.